We found an unusual trade worth $22.8 million on Coinbase stock, ticker symbol COIN, on the last trading day. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying Coinbase or bearish and selling Coinbase. Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. Now, for context, you can see that Coinbase is currently trading over here, which means it has technically filled this previous gap, which is a bearish signal on a technical basis. Also, this trading level here at about the 270 range is also a very significant level, because you can see here back on March 8th, we actually traded Coinbase as one of our membership trades, and we shared it with our members, especially our gold members, on March 8th when we managed our trade, taking profits at this 270 price when it hit new highs on March 8th. And you can see that the profit that we had made on this was about 292% profit based on our strategy that we used at that time. And so that is the value of our membership trades. We analyze a lot of data to find when the stock has a higher probability of profit based on multiple variables. And you can see that ever since then, the stock never really broke out of that range the entire year until just last month, but it has now come back down. And that is why Coinbase has not been one of our membership trades ever since then. It is a higher risk trade in comparison to our membership trades, so keep that in mind. So having said that, what is going on with Coinbase now? Let's dive into the new data. We can see here for the options time and sales tape on December 19th. These trades were being done, these 14,615 contracts at the same time at 12:17, and we can see at 12:49, these March 21st options, 11,400 contracts were being traded here, which is actually the more significant trade. Because if we take a look now at the data for these March 21st options, at the 200 strike puts and the 180 strike puts, the 430 strike call and the 370 strike calls, we can see that these were opening trades for the March 21st options. Over here, down on the put side, we can see that at the 200 strike puts, those open interests have added, and also at the 180 strike puts, where they were selling the 200 strike puts to open and buying the 180 strike puts to open. This is selling a bull put spread. It is a $20 wide put spread that requires $2,000 of buying power per contract. So keep that in mind. And then they use this credit to buy the 370 strike calls. And you can see our position is also in the same one here, and sold the 430 strike calls. We are also in the same position. And so this is what their trade looks like when we analyze it on the profit loss graph. You can see here on the risk profile that this trade represented here on this graph, where the x-axis is the share price of Coinbase and on the y-axis is the profit loss. Note the 0, and so when the lines are below it, it is a loss. And so if Coinbase goes down, it becomes a loss. If it goes up, it becomes a more positive gain. So this is a bullish long trade. And you can see here on the Greeks that we have a positive delta trade, which confirms it is a bullish trade. And because they sold these puts that are $20 wide, as we mentioned, this requires a $2,000 buying power per contract. And since we know there was a total of 11,400 contracts, we multiply that out to get a total trade cost of $22.8 million to sell these bull put spreads. And they use this credit by selling this premium to pay for the call spread. But as we mentioned, this is a higher risk trade in comparison to the trades that we share on our membership. Even though it is a $22.8 million trade, there are other data points that increase the level of risk on this trade. And so if you want access to the lower risk, higher probability of profit trades, then make sure to go to our website. We'll put a link at the top here where you can gain access to better trade ideas than this one to diversify your portfolio, because not all of these unusual trades will be winners. Some will be losers, but as long as we diversify with higher quality stock picks based on stronger data, then we can become profitable in the long term. Now you can see that we simply used position sizing and followed this trade without spending very much. We simply just bought the 370 strike calls and we sold the 430 strike calls without selling those bull put spread, because it requires $2,000 of buying power per trade. You can see here that by simply buying a call spread costs $773 of debit. And we are also in this bullish position where if the share price goes up, we could also become profitable. And you can see that our risk to reward ratio, max profit on the blue line, which shows up over here in this box, is $5,227 of profit per trade, which means our risk to reward ratio of 5,227 reward divided by risk of 773, which is the cost of the trade, the max loss per trade, is a 6.76 ratio, which means we could potentially make 676% profit on this trade. And so we always want to make sure that the reward is in our favor so that we can make more than what we could lose. And by consistently doing this, we can also become long-term profitable. That is one of our strategies. Not only picking the trades that wealthy investors are in. Now, notice that the other trade that we pointed out earlier over here, the 14,615 contracts, these February 21st options, one of them was actually a closing trade. And that is why analyzing the data carefully is very important, because following closing trades lowers our probability of profit. And that is what a lot of other websites and scanners don't do. They don't always look at whether or not a trade is closing. They just report all of the trades that are happening. But keep in mind, some of these wealthy investors are closing out of their trades. Now, if you take a look at this February 21st options at the 320 strike call and the 280 strike calls, if you look at the historical data, when we take a look at this trade back on December 18, before those trades were done on December 19, you can see that for these February 21st options, at the 280 strike calls, we had an open interest of 574. And then for the 320 strike calls, we had an open interest of 36,000. But notice that the new data from today for these February 21st options at the 320 strike calls have now decreased in the open interest, which means they were closing out of these trades. And you can see they rolled their options to the 280 strike calls. So they opened the 280 strike calls and closed out of the 320s, which means they're actually at a loss. And that is why this is a higher risk trade if you follow this one, because this wealthy investor is a loser. And so for higher probability of profit trades, we follow wealthy investors who are winners. And so there's a lot of data we need to analyze in order to figure out which stocks are the best to trade and how to trade them. It's not simply just looking at websites or scanners and following those trades. So if you want to learn more, then make sure to go to our website. We'll put a link at the top here. Let us know in the comments below. What do you think will happen to Coinbase? Is it a buy or is it a sell now? Especially after filling this previous gap. As usual, please smash the like button, subscribe if you haven't, take care, and have a wonderful day.